Welcome to another AriasWave video. Now, this particular video, let me just start by saying, lately I have felt that I need to touch on how AriasWave and fundamentals are inextricably intertwined. AriasWave being primarily a technical analysis tool has led me to want to understand how everything operates. Because although it is technical, humans are, humans. And these patterns are based on psychology. And ever since discovering these patterns, it has led me to ask more and more questions about how everything connects together. I want to start by saying I am not a financial advisor. This is just my own opinion. I encourage you to do your own research and learn the waves because they fit together. They are one and the same thing. That being said, I have been researching some historical material and listening to different views in order to understand certain things, right? Um, that have happened before and that will happen again, but not exactly in the same way. I like to dig deep and discover clues which connect to many other topics which I do not have time to discuss in this video. Now, I'm on the interest rate 10-year bond chart at the moment, and you can see that that's rising, but I'm just going to leave that one there for a second. Right, and I just want to take us over to, actually, let's go to, let's go to gold. Okay, just for the purpose of this video, I'm just going to remove these labels. Okay. Now, inflation, deflation. I've been listening to different views and, getting a feel of what's going on. I've listened to some arguments by different people, such as Peter Schiff, James Rickards, Harry Dent. I've been studying Ray Dalio, getting some advice from George Gammon, understanding the views of Martin Armstrong, Milton Friedman. Where do these arguments come from and who is right? There is a lot of talk about the money supply, which has begun decreasing exponentially, and the velocity of money, which has been decreasing. Yet there's no massive rise in inflation. The cost of living has been increasing along the same period. However, the question has to be asked, what really is inflation? Right? Now, in Milton Friedman's 1977 video on money and inflation, he tracks the rise and fall of inflation during the 60s and the 70s, which correlates perfectly with gold and even predicts the inflation trend up to like 1979. That was a very precise point in time because not only did interest rates top, but so did gold. So what has been happening since 1980? Well, precious metals have been consolidating. And even though money printing has been increasing during that time, debt has become cheaper, but has productivity been rising during that time up until this point? Given what has been happening in the world lately, I would say that it hasn't. Government spending would certainly increase deficits, so why would the government want to increase rates? Well, I think the answer is obvious. Productivity versus money supply. If productivity, aka supply, wanes, then aren't prices meant to go up? Well, they have been, but is it really because of inflation? Or has it been because of lower productivity and more money printing through debt and speculation? Supply and demand. As supply falls, prices rise. Okay. Can this be engineered? I believe it can be engineered in various ways in order to give the impression that there is inflation, because perhaps, there's been a period of deflation since the 1980s, right? Now, on this chart, the 1980s was right there, right? On that green line. Okay. Now, I'm just going to remove these labels right now because I'm starting to get a different feel for the waves happening in gold, right? What is this move and what does it represent? Okay. This is something that I will be tackling soon. And I also am very curious about silver and gold. In fact, I am starting to stack silver because I believe something interesting is going to happen soon, and I will get to that shortly. Confidence or sentiment? The number one socioeconomic meter, right? Let's just go to the Dow Jones for a moment. Okay. The number one socioeconomic meter, in my opinion, is the stock market, and my market of choice is the Dow Jones for measuring this. AriasWave was developed to understand the way that markets operate through specific pattern identification, no matter the size or magnitude of the wave. Right, as you can see, this is a B wave here. If it walks like a B wave and quacks like a B wave, then it's a B wave. So this is what I use to understand what the long-term sentiment is in markets. Did the Fed make mistakes during the 1920s? Just put a bit of a, make this obvious here. That led to the Great Depression. Sure, but as Milton Friedman says, they will try very hard to mitigate those mistakes, but will probably make other mistakes. I find this compelling when we see what has happened since that period. Now, inflation has also happened during coinage periods, not just, during money printing periods. Look at the example of Henry VIII with silver. I believe inflation is caused by a loss of confidence in government. I won't go into specifics of politics on this one, but I just want to point out that there is a lot of divisiveness in the world today. The way the elections were handled and the way in which red and blue are so very against each other in very unprofessional ways, to me indicates that the cracks are showing. The way in which governments around the world have handled the coronavirus by essentially shutting down the economy, well, I think that's probably affecting confidence. Conspiracy theories have been rampant since the beginning of the internet. Possibly before that, one must ask why that is, right? When people lose trust in the government, they hoard money and save because they don't trust the future, which leads to the money supply and velocity falling, which leads to even more money printing and higher interest rates, which leads to real inflation and possibly hyperinflation. Right. So this is what I believe is going to be the catalyst here. It's going to be related to the loss in the confidence of governments around the world. As you know, governments have been handling the current crisis pretty much the same way, right? Give or take, whatever, right? Now, when it comes to, the currencies and fiat, I believe fiat money is based on the same principles that I've just talked about. It is simply all based on confidence. At the end of the day, I don't see any of these currencies collapsing as such. But although this could happen, I do also understand that there are rumors and conversations around central bank digital currencies, which would be created in order to mitigate against hoarding of currency and bank runs and increase the velocity, to increase the velocity of money. But I believe this would also lead to further loss of confidence and destruction of our liberties. This has opened the door for some future predictions on what will happen in the cryptosphere, but I will save this for a future video post. When it comes to Bitcoin or cryptos for that matter, I believe the current run up is correlated with the Dow Jones, aka confidence or socioeconomic meter. Whether it's because of anti establishment sentiments or because of money printing and cheap money, or maybe even a mixture of the three, based on the waves, to me, I see cryptos just like just what happened before the dot-com bubble bust, right? They crashed, but they came back stronger than ever, right? Now, just to illustrate this view, this point that I've just made, I want you to understand that AriasWave looks at the patterns, right? So just say, for example, right, I talk about crypto, or sorry, let's just use Bitcoin for an example. I use Bitcoin, I say, well, Bitcoin is in a B wave, okay? But you have to understand that B waves happen at all degrees of trend, right? So just say, for example, right, the dot-com bubble, right, was the end of a B wave right there. So I'm just going to get rid of this line here. There we go. That's a B wave there, right at 2000. According to AriasWave, that's a B wave. So what came next was a weak wave C, all right? Now, I only believe that it was a weak wave C in this particular case because of it being part of a larger B wave, and also because of certain measures that were taken at that particular time that were still in line with interest rates were still falling during that time. So the tool belt for stimulus was still alive and well back then. And then you had your real estate bubble, and then your E wave for the GFC, and then you had the C wave. So basically, what I'm saying is, if cryptos are in a B wave there, they're going to see the equivalent of a CDE before they move up. Now, are they going to see this kind of CDE where it's sideways and small before they rise higher? I don't think that's the case, because cryptos aren't themselves within a B wave. They're not part of a larger B wave per se, right? So in general, they're a part of like a B wave, like the whole pattern of a B wave, right? So if you look at this, like for example, as in 2017 high here, back just using an example of the waves here, 1929, you had your A, and then you had your B. Your B was expanded, and that's what I think Bitcoin is currently at. It's an expanded type move, but well, actually, it's not really an expanded B wave, but it did go above the end of wave 5 of the first wave, right? So it's an A and a B. Now, it's not expanded in Bitcoin, though. In this particular market, it's expanded, but not in Bitcoin. But it did go above. That's fine. I do expect this sort of price action to happen in Bitcoin, CDE down to the downside, in probably a large percentage loss. Large, right? How large? I can't really tell you right now. I think that there's going to be a lot more going on during that time overall that will probably explain itself at the time. I don't want to get into that because we're not there yet, right? We still have to see certain things happen first. I'm not saying it's crashing now. It's not crashing now, right? Like I said in my previous video, which I'll link below, we have to see certain levels broken first, and probably really sharply as well, in order to see some kind of reversal. So please don't don't take this the wrong way. I'm just looking for evidence. Okay. So the B wave that it's gonna the C wave that it's going to experience is like what I'm seeing that's going to happen in the Dow Jones, right? To me, what's going to happen in Dow Jones is a retest of a longer term trend line after a breakout of that trend line, which to me is like indication of potentially like wave 3 price action. Now, it could be wave 3 price action. In fact, it probably is wave 3 price action, right? Like long term, there's probably going to be a huge move up. There's probably going to be so much going on, right? But before we get to that point in time, there needs to be some kind of correction. And I'm sure that you know all about support and resistance. Resistance becomes support. Now, just because this is a long-term trend, long-term pattern, does it mean that it can't happen on a long-term basis? Well, of course it can, especially during a B wave, especially during a period of, massive debt and money printing, right? Because even if you look at it like, okay, so since 1971, when we came off the gold standard, right? You really want to look at it like that, right? Well, you have to understand that this period of time is only after a Great Depression, and basically only after it just came back to roughly around the same levels as before the Great Depression. So really, there was like probably like a lot of a lead up to a lot of inflation, but it's also just bouncing back from a depression. So as you can see here, this long-term channel, which by the way goes back hundreds of years, I have a long-term chart on stocks. It's basically just breaking back above that channel, and resistance becomes support. But it's not to say that it's going to keep going higher, because it's going to come back to retest that, right? That long-term channel. I believe, that's my opinion. You can not believe it if you want. That's fine. I'm not a financial advisor, right? But this is how I see this sort of thing panning out due to the excesses that have gone on during this period of time. But at the same time, on a technical level, it's like, retesting of new support. Okay, so that's just how I see it. I can't, until I'm proven wrong, I'm just going to be looking for sort of evidence of this. So to me, I find it really interesting. Like, let's go to silver. Right, I've been getting very interested in silver lately. Right, sorry, 1 second. Let me go to the other one. And I do believe that there is absolutely massive potential for silver, and that's because of what's been happening since the 80s, right? Even though there's been a lot of, interest rates have been going down, and I do believe interest rates are correlated, right? If you look at that money versus inflation video, Milton Friedman, he basically he calls the peaks and troughs in inflation figures, which line up perfectly with precious metals. But since 1981, because of the interest rates going down, right, silver hasn't exactly gone down all the way. It's actually been getting ready. I mean, look at this pattern. Okay, apart from the fact that I reckon this is a 1-2-1-2 going on here, I do see other things here too, like a cup and handle pattern. I mean, is that not bullish, right? Can you not see that there is a higher highs, but also higher lows? Like, I do think that this thing is getting ready to explode, because we're going to see actual real inflation, not just the type that is pretend inflation, or what seems to be. I mean, if you watch Milton Friedman video, he actually does explain how the government actually tries to make it look like inflation when it isn't. So, I mean, there's so much more to go into here, but there's obviously my time is running out. So hopefully you found this video interesting and informative. Thank you for watching.